The Fed already knows the number. So if it comes in super low, meaning inflation is very low, then 50 basis points is definitely on the table. They may have already made up their mind. Otherwise, meh, which all means the street believes CPI should be a non-event.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. In today's market rundown, we will be discussing CPI and a quick recap of the debate, materially speaking. Let's start with the markets. The dollar is 101.37, down 28. 10-year yields are 362, down almost 2. S&P 500 is 54.82, down 9. VIX is 1938, up 31. Gold is up 5 and change. 25.21 near the mid to high end of the range. Silver very strong at 28.80, up 40 cents. Copper up 5 cents, up 1.26% at 412. Gold, silver down, as you would expect, strongly or weakly. WTI 67.76, up over $1. Natural gas 216, flat to lower. Bitcoin 56 and change, down 965. Ethereum 2320, down 66. Palladium down 2 at 974, and platinum up 2 at 939. Grains are all up rather uniformly. 1023 for soy, 394 for corn, and 580 for wheat, up 9 cents, 2.5 cents, and 4.7 cents respectively, all about 75 to 85 basis points higher on the day. Okay, let's start with CPI. So the stories today are CPI prep is at 8:30. It's a possible tiebreaker, and we have some debate. Bottom line stuff here for you. No editorial comments. There's the front page buy season's full timeline, which is turning out to be a dud if you're short. The UAE African gold play is a big deal. That's our analysis of that story that we had, and some CPI information there for founders and other stories that we put out yesterday. This one is short and I think sweet, saying almost directly that Russia is selling its oil and converting those profits to gold. All right, let's get to the analysis. CPI prep, the possible tiebreaker. That's a quote from Wells Fargo. CPI headline expected is 3.2% year over year. That equals about 0.2% month over month. Core CPI expected 2.5 year over year. That's a significant drop, but it's expected down from 2.9% in July. Wall Street has a good handle on CPI this month. See the dispersion chart that I have there. Therefore, they believe CPI should not change expectations one way or the other for the Fed cut. At this point, the Fed has its mind made up one way or the other anyway. The Fed already knows the number. So if it comes in super low, meaning inflation is very low, then 50 basis points is definitely on the table. They may have already made up their mind. Otherwise, meh, which all means the street believes CPI should be a non-event. Okay, now I can get you all excited about that by saying because they think it's a non-event, it could be an event, and that's always true. But anywhere between, call it 1.75 and 2.25 is a non-event. Okay, the trend is there. The outliers will have exaggerated reactions, however. All right. The Fed's not looking at CPI anymore. CPI could be the kicker, hence the tiebreaker phrase. And as a result of that, you would want to watch it. But most of the big money is probably positioned with their bias in mind already. All right, moving to the debate. Just giving you a dry recap from Newsquark, actually. U.S. Vice President Harris said she supports small businesses and will offer a tax cut for these businesses, while she added that Trump left them with the worst unemployment rate, an economic recession, and the worst attack on democracy since the Civil War. Harris said that Trump got them into economic wars and that he thanked the Chinese president, but is attacking him today. Furthermore, she said Trump favors campaigning on issues instead of solving them, and that 81 million Americans fired Trump, which is hard for him to realize. Former President Trump reiterated that millions of migrants are pouring into the country illegally and taking our jobs before our eyes, which he added the economy is terrible economically because of inflation, which is devastating to the middle American class. Trump also commented that the Biden administration only gained bounce back jobs, as well as stated that Harris doesn't have an economic plan and copied Biden's plan, which, by the way, all right, I'll make an editorial comment. This is what you say if you're a politician. And by the way, everything that Trump did economically, Biden extended. The message wasn't the problem for Trump. They just didn't like the messenger. On Trump's side, well, I mean, he oversaw the beginning of the inflation. You can't really say he's immune from it. But anyway, they're coming for me. All right, that's it. That's it. Which means the data, CPI, PPI tomorrow, and there's some analysis for you, all that other stuff up there on CPI continues at the bottom. Let's take a quick look at the markets and we'll go. I wrote a note to myself here. If gold holds 2482, then silver should move on its own to 31. Sometimes I forget why I write things, but I remember why I wrote this one. And that's because daily. This is the 2482 level. This is that ledge that I've been waiting for it to break, basically this line from the top here. And if this level holds, then I think silver catches up and goes to 31. I have other analysis to that effect. But you'll notice, if you look at the chart today, you'll notice that just don't look at gold for a second, right? Copper, silver, oil are all up. Okay, today, everyone's looking at commodities at being undervalued, industrial commodities. So today, maybe people aren't so worried about China. Maybe people aren't so worried about, because China is where the commodity demand is. But yesterday, oil took it on the chin, and oil is going to continue to take it on the chin until after the election, in my opinion. And the lower oil goes, and this is extremely important, the lower oil goes, the harder it is for countries like Russia and Saudi Arabia to make money. The harder it is for them to make money, the harder it is for them to buy goods from China. So they've got their own little deflationary spiral going on here. If Russia can't make money, then they can't buy China goods. If China can't sell China goods, then China's manufacturing becomes, in fact, excess and languishing, for lack of a better word. So if you believe that China is going to go into a deflationary risk if we keep rates higher, then you don't want to be long base metals and you don't want to be long oil. If you believe, as I do, that if the Fed does not cut 50 basis points, this is the chess part. If you believe, as I do, that if the Fed only cuts 25 basis points and that hurts China, because our not easing money, like our fighting inflation is causing deflation for them right now. I think that they're going to look towards stimulus once again. And that stimulus will get their economy going a lot faster and a lot stronger. So anyway, there are the markets. Oh, one other thing I want to say about gold here. I've been saying this, and I want to make it clear so people understand what I'm talking about here. Oh, let's get rid of the lines for a second. This is a big, big, big important seller who said to the market, do not go past me. Okay? Gandalf. And the market respected that. It may have retested it. There are people who didn't understand that and they got slammed and they tried it again. And here we are again. So as has happened in previous ranges from here to here, the market has stayed in a range. Open interest has shrunk as opposed to the market has dropped while open interest has shrunk, indicating underlying strength. And that underlying strength is once again here. So the question is the lid still on the jar or has it been taken off? And I think that they will let this lid, the lid's been loosened. They will let this market rally above that line now. The question is, what will they do once it gets above it? Okay, right? The forces that be. But the truth of the matter is, this market is doing what it's been doing for months. Okay. Cap it, range. This is all the buying by bullion banks and central banks. Cap it, range, buying by bullion. Look, cap it, rounding bottom, cap it, rounding bottom, cap it, rounding bottom, cap it, rounding bottom, cap it. Cap it, flatline. It's getting stronger every time it's capped. So, sell season aside, I always talk about that. You got the BRICS and you got the election coming up. I do not think I'm increasingly very skeptical of the forces of sell season. Anyway, that's it. This market has multiple big buyers in it. Down here it was central banks. In here was macro discretionary and sovereign funds. In here, I think this is bullion banks as well as macro discretionary specking for the election. Be careful of the election spec as well. All right. I'm Vince. Have a great day. There we go. We're testing it right now. We're testing a high right now.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1 ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot. Well, we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1 ounce gold Courants for only $60 over spot. And again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.